Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. The S&P 500 has just been on a massive run throughout the past couple of weeks. We've had a 12% run from the recent low here. Now just think about that for a second. That is more than the annual average return of the S&P 500. These are absolutely monstrous gains in a very short amount of time, and definitely I think a lot more than what anyone was expecting right here at the bottom. Right? Everyone was bearish at the bottom. Everyone was talking about inflation, tightening, and all that. I think very few people were expecting this type of a rally. I have to admit, even I was surprised by the strength of the rally here, and I think I'm probably one of the most bullish channels out there that's actually expecting the markets to significantly take out its all-time high. But should we really be surprised about this rally? Now, this is a chart that I saved back when we were at the bottom and I was gathering all the information on how bearish the market was at the bottom here and how absolutely one-sided the trade was. Everyone was looking down. Nobody was looking for a rally. Nobody was looking for the markets to recover. And that was shown in the put volume, right? This is the put value traded as a percentage of the market cap of the S&P 500. And you can see when you have spikes, it means a lot of puts are in the market. A lot of people are betting for the markets to go down. That's usually when you want to look the other way. Every time you have big spikes like this, it corresponds to significant bottoms and big recovery rallies, right? Happens every time. So should we be surprised that we saw that type of move here? I don't think so. Now, I did expect the market to see some short-term volatility and have perhaps one final move down that shakes out a lot of investors before actually breaking down. But, we try not to focus on the short-term price action. If you get caught up in the day-to-day moves, you're going to get crushed. Let's focus on the big trades, the big macro trends. But we're going to talk about that in just a second. Now, if you're interested in following these crazy markets with us, make sure to smash that subscribe button. Also, click on the like button if you enjoyed this episode. It really helps push our videos out to a wider audience. We've had a tremendous amount of support lately. It's really helped our channel grow and push out our content to more people. So it is really, really appreciated. And now, without further ado, let's get right into it. All right, so, could the S&P 500 give back some gains? Could we see a correction here? We're looking again at a 12% rise from the bottom. Are we heading straight back down to undercut that low? That's the question that everyone is asking. So we're going to cover that in this episode. Now, disclaimer, as I said at the beginning of the video, I don't like to focus on short-term moves. There's a big saying, I think this is Ray Dalio that says this: anyone who sits too long by the crystal ball will end up eating ground glass. You can have a overarching big macro trend thesis, but the actual price action could play out in a billion different ways, and you're not going to be able to predict it move by move, right? What we do on gameoftrades.net is not try to predict the exact path of the price, but as we see the price action play out, we assess, we look at the indicators, we take a look at the breadth, we take a look at different indicators, the volatility, momentum, the sentiment, and whether we should be positioning ourselves long to take advantage of that macro trend that we believe is playing out. And I'm going to talk about that trend in just a second. Let's dive in for just a second, put up the RSI here, and I'm going to give you an example of that type of analysis. The trend is overextended here on the 8-hour chart. Now, does that guarantee we're going to see a pullback? Absolutely not. But it does guarantee that this is a much less favorable buying opportunity than it was right here. So that's kind of the concept. So could we pull back here a little bit down to stronger levels of support before we resume the bull run and the final run to the top? That's absolutely possible. In fact, that would make us consolidate till around the beginning of May. And guess what happens in May? We have the Federal Reserve FOMC meeting. And everyone that's been talking about the tightening and the beginning of the tightening cycle and maybe 50 basis point hikes, right? All of that, that's going to go right into the trash. Everyone is going to forget about that because guess what? The most important yield curve, the 10-year minus the 2-year, has just inverted. And the Fed does not tighten into an inversion that has never happened. They missed their chance to tighten. They should have tightened a lot earlier. And so I think they're going to backtrack on a lot of things they've said throughout this period right here. And I think that's exactly what the market is already anticipating right here. If you're wondering where is all this coming from, I think a lot of investors have realized this. Now, again, this is not the moment to FOMO right here. I don't have a crystal ball, but I think, the market always seems to give you the opportunity you're looking for if you're patient enough and if you have what it takes to step in at that moment. If we have a pullback back down to support, we'll be posting articles, updating our trading watch list, looking at the sentiment, the breadth, momentum indicators here to see whether this is another buying opportunity for that next leg up. If you want to have access to our convictions, to our research, make sure to click on the link down below to check out our service at gameoftrades.net. So back to that macro trade. We just said that we're seeing a yield curve inversion, meaning recession risks are skyrocketing right now. In fact, that's what everyone seems to be talking about right now. But what people are missing from the picture is that means that the Fed is going to back off from monetary tightening. And I find it absolutely fascinating that nobody is talking about this. Now, I know I'm going to get subscribers that come out and say that, how can I say that the yield curve inverting is bullish when it means there's going to be a recession? And that's a very fair question because, you're absolutely correct. The yield curve inverting is a bearish phenomenon. When you have a yield curve inversion, the stock market tends to top around a year after. So that's the moment where you should start to look to scale back and take some profits on your long-term investments because risks are rising. But right now, looking out maybe 6-12 months between now and the recession, you've got that sweet spot where the Fed starts to back off from monetary tightening. But if I show you this chart, it shows you the percentage of the yield curves that are inverted. And right now we're still very low. So we're in that sweet spot where recession risks are rising, but we're not yet at that 100% place where the market is really going to start to price in an economic disaster. So really looking out 6 to 12 months, I hate to say it because of how ridiculous it sounds and how rigged all of this is, but the markets can go higher here. And, I think that considering what I'm seeing right now on YouTube, on Twitter, and on the news, nobody has caught on to this just yet. We're very early on that trade, and I like being early on the trade because it gives me a lot of sense of safety when nobody's talking about this. And considering how violent all of this has been and how concerned investors are over tightening, it tells me that when people realize that all of this is behind us and that actually the Fed is going to be a lot more dovish than what they've been saying, do you think that people are going to FOMO? Do you not think that Tina is going to start reappearing, right? There is no alternative when you've got 8% inflation and the Fed is no longer tightening, they're easing again. Everyone's going to forget about that yield curve. Everyone's going to FOMO back into the market, and that is going to be the moment to exit, my friends. And of course, we'll be updating you guys every step of the way. We have a long S&P 500 and long NASDAQ 100 trade. This is the third long trade that we've made on tech since the website started. And that means that we're going to be updating you guys on that every step of the way, looking at the important developments, important levels. If you guys enjoyed this episode, make sure to smash that like button. Now, in the meantime, I wish you good luck on your trading and see you next time.